Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, February 10, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, let's start with above all the moving averages, the trend is your friend. So that's item number one. Why is that? Because the dominant thing always takes precedent. So for example, the longer term moving averages take precedent. Above all the moving averages on a daily and a weekly chart, mind you, take precedent. Above all the moving averages, there's nothing wrong with the tape. And oh, by the way, let's slip this in. It's a day late. It's a belated Gulf of America Day, which is now February 9th. Pretty interesting. We'll give that a funny how that works. If you don't know what I'm talking about, look it up. Gulf of America. Today was also what's called an inside day. What's an inside day? Where the high and low of today were inside the high and low of yesterday, or in this case, Friday. Friday was a down day. Today is an inside day. It was a narrow ranging day. The market really didn't give us any new information. It looked like a big day from a gap up perspective. If you look at an intraday chart, you see here a 15-minute chart, market gaps up, and she basically traded sideways for most of the session. But the only thing that really happened was it was an inside day to Friday. The other thing that's important to note is from the high, we do have a trend line that slopes downward, and therefore, if she gets up to that trend line, misses market, it should be overhead resistance. Now, the trend line is a stone's throw away from the all-time high. It's not that far. But from a technical perspective, in reading the tea leaves, reading the charts, that's the way it's done. So the trend line is, in fact, important, period. The more time she eats off the clock in a bullish type of consolidation-ish pattern situation, the more she's building energy to make another push higher, just like that. This is a channel. It's a bullish channel situation. If I draw it like this and said, hey, look, you have a bull flag situation, you would say, hey, yeah, we have a bull flag situation. What breaks the chain? What breaks the chain from this bull flag situation? Below the low from the 3rd of February, the low is 590.49, closed daily below that, and there's an Irene situation on the way. What's an Irene situation? It's short for good night, Irene. There would be a lot more downside if she gave away the low from February 3rd on close. We'll call February 3 Irene Day. Taking a little detour, I get asked all the time, hey, what's the performance of the Lazy Swing Trader? Well, you can go to lazyswingtrader.com and it's posted on that page. On the right-hand side are the gains and losses. These are a bunch of base hits. There's a handful of losses. Here's a loss here. There's another one down here, another one down here. So there's 3 losses on this particular page we can see of 25 total trades. What kind of win percentage is that? Pretty freaking good. There's a bunch of base hits. There's a handful of doubles. And this is what the service is. Why? Because base hits put you in the Hall of Fame. We have exits number 1, we have exit number 2, we have exit number 3. And here's the list of open alerts. These are trades that are still open. You can see here, profit and loss. Some will be at a loss. They just are new positions. Minus 0.5%. Same deal with the last 2 or the next 2. Then you got a 5%er. You got a flat, 4.5%, flat, 4%, 17.8%, minus 4%, 7% up, 4.5%, 7%, 4%, minus 2%, plus 5, plus 5, plus 3.5. So you can see what goes on here from an open trade perspective. I'm an open book. I just gave you the whole thing. Nothing to hide. Lazy Swing Trader, automagical algo system. Has text alerts, email alerts. You get fed a constant flow of base hits both on the short and the long side. How you doing? What about inside the numbers? Here's the commentary from today. We have stocks on the move. We have a list of markets, a dozen markets we cover. Let's cover the numbers and see if anybody made money today inside the number and the live room. I'll give you a hint. We nailed the low of day. We start out the day for the no dice for the three-peat, and then we move down to digging into the numbers. 604.60 is an important spot. It's magnetic and overhead resistance. And here we have a 5-minute chart where right of the vertical is today's activity, and you can see pretty clear this area, 604.60, was absolutely important. You could see it in the morning. You can see it in the afternoon. You can see it late in the day. Regardless, 604.60 was very important. Above, she gets bullish for another number. We'll get back to that in a moment. Below, she has an opportunity to fall. We'll get back to that in a moment too. We're going over the commentary and the numbers from an inside the numbers perspective. We were considering it a bull pivot. As the day gets underway, let's see what else we have in terms of numbers and commentary. 9 o'clock, what's the scoop? Well, 604.60 is the bull pivot, and the thieves in the morning have already had a direct line up there. Funny how that works. It's important, magnetic, and overhead resistance. Here's what we'll say. Between 604.60 and 605.50 is an overhead resistance zone where they should not simply waltz right on through. 604.50 or 604.60 up to 605.50. Overhead resistance zone, not waltzing right on through. Back to the chart. Second blue line above is at 605.50. You can see here in the afternoon, bullseye 605.50. That was, in fact, high of day. This is a resistance zone where they should not be able to simply waltz right on through. They were not able to waltz right on through. Overhead resistance. And what I can tell you is it pays to know your numbers before you start the morning session. You show up at 8, 8:30, 9 o'clock in the morning. Market's not even open yet. You have the layout. You have a morning schematic. Where are the important numbers? Where's resistance? Where's support? These are things I need to know in order to make profitable trades. How you doing? How about this one? Staying below keeps the door open, below 604.60 that is, keeps the door open to fall back toward 603.35. There's your early morning schematic. 603.35. The third blue line down. As you can see, they came into it. They rallied back up to where? 604.60 and higher. Came back to do what? Test 603.35. Let me ask you this. Just look at this objectively. Did we have the numbers that were important today? Shake your head like Motley Crue. Yes, we did. This is all before the market even opens for business. Read the notes. Go back to the chart and double check the work. 603.35 is support. 604.60 is resistance. They'll do one or the other. This is at 9:32. They did one or the other. They did them both. By 9:37, we're narrowing things down. 603.35 to 602.40 is a bounce back in the other direction support zone. Could I be any more clear than that? No. There's your 602.40. They came to what we call in the live trading room the midpoint phenomenon number. If you want to know what that is, take the course MSF Masterclass or come experience the live room and trade right alongside me over my shoulder with the rest of the live trading room crew. We got a bunch of people making money in there each and every day. Before we get on to show you the rest of the notes, let me give you an example of something else that went on in the live room today outside of Inside the Numbers. This is a live room only situation. We have plenty of other trades in there outside of the live room. It's things that come up after the market opens. Different than Inside the Numbers that's presented before the opening bell and the commentary while the morning session is going on. Case in point, how about Tesla? Hey, Dave, you got a number in Tesla today? Sure I do. Of course I did the work before the market opens. I always do. 352.50. She came into it. She played around with it for a little while, and she had a rocket ride away from it, up about $8 or $9 from 350 250. Did traders take that long position in Tesla? And the answer is absolutely. Ask Armand. He had a little bit of a bonanza in the live room today. Remember, pause the video, read the notes, go back to the chart, and double check the work. What I've done is highlighted for you the important numbers, shown you where the market went to and reacted from those important numbers. We have stocks on the move each and every day. This morning we had 3, and then we have the list of a dozen markets, important support and resistant numbers for today. These are updated each and every day, like, as they say in the trading parlance, clockwork. What about Camp IWM? What's going on over there? Well, we had somewhat of an inside day similar to the spiders. She's hanging around in the convergence of these moving averages. Again, still eating time off the clock. You can call this a channel. You can call it whatever you want. It's depending on what you want to believe. If you're bullish, you want to believe this is a channel making a bullish move after a move higher, setting up pace for another breakout above this channel. If you're bearish, you want to believe that they're going to give up these moving averages over here and scale back in the southern direction. What's the right thing? Well, we don't know exactly what's going to happen, but what we can say is below these moving averages, it's the bear case. Below the low of this breakup candle low, 223.21, and the further bear case comes into the fold. Clear up some of the daily chart noise, and you go over to the weekly chart, and you find what? You find that she's hovering, she's fighting the 20-week moving average. An opportunity to close above it last week, did not do so. What will she choose to do this week? This, unlike the daily chart, can be considered a bearish channel, flaggish pattern type of situation. You can draw anything you want, and as long as you have a story to go alongside the drawings on the chart, you can certainly make a case for anything you want. So we have a move down, we have a bearish, flaggish situation going on, being contained by the 20-period moving average on this weekly chart. Now you get above these highs from the last 3 weeks, they'll break the chain. You get above the 20-week moving average and close a week above there, she's starting to break the chain. This is a longer-term chart. It gives us a better depiction of what's actually happening from a big picture perspective. Camp IWM. She was up about 0.5% today, about $1. Spiders were up a touch more. A little bit of relative weakness, but we can't really call it relative weakness. Nothing we're willing to put up on the board. Now, what about the folks down at the transportation department? Up 1% today, 165 points, pretty decent day. Leading indicator, right? This is my second favorite leading indicator next to Camp IWM, but a number one canary in the coal mine. Is this a dead cat bounce-ish situation? We'll see. They're heading up into the convergence of these moving averages. Also doing a garden variety retracement from the most recent pivot high to the most recent pivot low. These moving averages are roughly a 50% retrace of that. That is normal garden variety market behavior. Write that down, put it on a sticky note. Today, she closed above the last breakdown candle high in the sequence. If you're not familiar with what that is, you should check out the course, MSF Masterclass. It's all discussed and taught in there. It's part and parcel to how the market works. Similar to Camp IWM, you look at the weekly chart and you say, all right, hold on a second. You got a bearish situation going on after a move lower. This is a weekly chart. Has yet to be able to close above the high of the weekly chart, breakdown candle high. Gave it a shot, couldn't do it, sold off, remains in this channel situation, could be setting up for a move lower if you break below the channel. A move higher would signal a close above and staying above the most recent breakdown candle high in the sequence. Team Transports, from a weekly chart perspective, clearing out the noise from the daily chart. How you doing? You can visually see if you give up these lows over here, that's trouble. They were hovering above the 100-period moving average as they were finding stability here. Does anybody think that the 100 period moving average at this point would be the same type of support had they come down straight into it, for example, over here midway through December? And the answer is no chance, Jack. What about the Q people? Again, still in a situation where we've got lower highs, but the daily chart, we certainly do have the market above all the moving averages, and the trend is your friend, and that is the dominant thing, including when you flip over to the weekly chart and you find them above all the moving averages in an uptrend. The trend is your friend. Nothing wrong with this tape. This is actually a strong situation in an uptrend, period, full stop. Yes, we do have other things that are canary in the coal mine-ish, leading indicator-ish, small caps, transports, all that stuff. But until the Qs roll over or the spiders roll over or put in a sign and or signal of a trend change, all you have are markets that are in an uptrend until proven otherwise. What about the financials? Well, it was a down day in the financials, about 0.8%, 41 cents in the XLF. Above all the moving averages, trend is your friend. We will keep this on the radar screen. We're not discounting a down day. We're just saying it's a down day while they're above all the moving averages. The trend is your friend. They're at new highs above all the moving averages, weekly chart. The trend is, in fact, your friend. A down day is just a down day. On this weekly chart, it's a long week. You got 4 more days left to see what the financial space is going to do. And then you have Smashmouth, or the Philadelphia Semiconductor Index, traded up into the convergence of these moving averages over the last few days, trying to bust through, trying to get above these moving averages, above this pivot high here, which is also above the moving averages. This pivot high is January 31. Above that, and you start to open the door all the way up here to fill the gap above 261. Doesn't mean it happens all in one bite, but that's the next progression of events for the bull case if she establishes price above that pivot high, above these moving averages, above the moving averages slightly after today, but she's got to confirm or substantiate that for another day or so. Weekly chart above the 20-week moving averages. From a weekly chart perspective, the trend is in fact your friend. She closes above there this week. She'll be headed toward the gap that's left open, the one we just talked about on the daily chart. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.